Hey, what's up guys? It's Cody Ketzner here with Keller Williams, and I'm here with my friend and one of the hardest working people I know, Leah Kieso with Inlanta Mortgage. And we are here today to talk about interest rates. And so I brought in the expert of interest rates. So Leah, talk to us about what's going on with everything recently.
Well, we're coming off of the lowest interest rates I've personally seen while I've been in the business. And that created this high for everybody. We called it the refi boom and the purchase boom, and it was booming.
It was.
I mean, people were getting down below 3% on some of their refis and purchases, and then what I was seeing happening is that I had all these people pre-approved to buy, and then guess what? Everybody's fighting over properties. So there was a lot of people that did not win, which I know we both had that happen with some of our mutual customers. And then what happened is when we realized that the economy was changing completely with, starting with the stock market reacting to this COVID-19. The government tried to immediately curb that by lowering the prime rate. And we thought that the next day we'd wake up. They announced that on a Sunday. That was about 3 weeks ago.
Yep.
And so Monday I thought, oh, this is going to be a great week. The rates are going to go, they're going to go down and it's going to be great. And it didn't affect the market at all.
Yeah. So speaking of that, so everybody's been coming. I know that I've gotten quite a few people asking me, and I'm sure you've gotten dozens of phone calls, hundreds maybe. Everybody's seeing the rates are zero.
Yeah.
Now, how does that affect mortgage rates? Because mortgage rates aren't zero. Yes.
That's a really good point. It's just good for everybody to know when it comes to doing a mortgage. When you hear the prime rate, that actually is the consumer rate. So if you were going to go finance a car or you were going to go get a credit card, those are where you're going to get the lower interest rates. So we are actually in the mortgage rate, we're driven by the bond market. So whenever you listen to the financial report for the day and you hear, oh, the stock market's up so many points and the bond market's up, that's when you go, okay, the bond market. If the bond market's up, then our interest rates go down. So we're not as in tune with the market when you hear them talking about the prime rate.
Gotcha.
So what ended up kind of happening for mortgage rates, we just started to discover that the people that buy the loans, or the banks that, they finance the loans, or in my case, I'm a correspondent lender. We actually have, we take the loan all the way through underwriting and we process it. And then we fund the loan, but then it gets serviced by another mortgage company. Okay. So like maybe Wells Fargo or Chase Mortgage. Sure. And so we started seeing those investors start to get really nervous about the loans that they were going to commit to. And so rates didn't go down for mortgages much. They've kind of settled back down a little bit. So like this week, I have seen rates, mid threes, so 3.5, maybe on a 30-year, maybe a little lower. And so we're loving that. Still having people refinance. Sure. Especially if people do a 15-year loan, you can still get a pretty good rate, lower than 3.5.
And that was going to be my next question, because I know that rates are changing pretty much every day, it seems like, and multiple times a day, I think you were telling me. So it's hard to keep up on that. But so you answered that question. So then my next question would be, what is kind of the process if someone was looking at the rates now and they have higher interest rates for their current mortgage? Like, what's the process like for you to do a refinance with them at this point?
Well, first of all, it's always a lender just has to have a loan application. So if anybody's interested whatsoever in discovering a true refinance where we can really give them good advice, they're going to have to fill out a complete loan application so I can see, their income and their credit report and their current mortgage rate, their mortgage payment and their interest rate. And we even have people that we turn away sometimes because it's really not enough of a net tangible, we call it. So a really good thing, just kind of it's probably the easiest way, layman's way to figure it out would be like, let's say you're at 4.5% on a current mortgage. If you move down to 3.5, that's probably going to be about where it's going to make sense for you to refinance. Sure. So, and then we look at what the difference is even in the payment. And most people are like, cool, if I can save $200, $300, $500 a month, sign me up. Yeah, heck yeah. The other trend is that people are moving from a 30-year to a 15-year. Okay. So the interest rate will be a lot lower, but the payment will stay about the same. And I've just seen a lot more people especially millennials and lower, they really want to try to pay off their mortgage payment. while they,
Us.
right? So the 15-year loan, you can really pay that off in your lifetime. Most people think, 30-year loan, I'll never probably pay that off.
Right.
But those 15 years, and you just save so much on interest by the end of the loan.
Wow.
And you pay one extra payment, maybe a year, and it's less than a 15-year. So that's another really big trend.
It sounds like there's no reason they shouldn't refinance with you.
Right. Yes.
So I know that this whole COVID thing has really affected the whole industry, the whole nation for one, but the whole industry for one. For us, we have to be very precautious. Open houses, we're not even having them anymore. Everything is pretty much virtual, and then the showings we do have, we're wearing gloves and just being very careful about what we do. How has the COVID and coronavirus affected you in your business and how people work with you?
Right. We are so blessed that we can do everything financially online now. So most financial businesses, if I can get to a laptop, I can sign in, I have Wi-Fi, I'm good. Our company has worked literally 7 days a week the last probably 6 weeks.
Yeah.
So I see our underwriters get on and underwrite a loan on a Sunday.
Yeah.
Everybody's working really hard.
Sure.
So we haven't skipped a beat. It's amazing. But we do rely upon third parties tremendously, like you do.
Sure.
For appraisers and title companies especially. Wow. And they really are the front lines. They're kind of like the people in the medical field right now to me and you.
Yeah.
So I have a closing going on this afternoon, and that title agent is trying to keep their distance with a lot of people that are coming into close. So
sure.
As long as those businesses can stay open, we'll be able to stay open. But I have noticed a difference. It's taking a little longer to get appraisals back. Or there's certain appraisers that have medical conditions. They don't want to be out and going in houses. So they're modifying appraisals a little bit. So, who knows? I mean, hopefully our state will continue to let our businesses stay open.
Sure.
But if one of those third parties falls out, then we will be a lot more restricted.
Sure. So you may have answered this already briefly, but if you're looking at refinancing, who really should say, what are the qualifications of someone for refinancing? What is the point where you're like, I should refinance?
I would just, everybody's it's a one-on-one conversation probably.
Sure.
I just have people should reach out to me and I can talk to them. But I mean, kind of that really good line that you can say, if my interest rate is at least a whole, point higher than what the rates are today, that's a really good indication.
Okay.
Or if they think that they've hit 80% loan to value. So most people think of it as I have 20% of equity in my house.
Sure.
That's a good time to refinance. And if they're really close to that, get rid of their mortgage insurance. And get that lower interest rate. And then we'll show you how much you can save every month, and that's always exciting.
Very good. Well, I always recommend you. There's no doubt about that. You really are one of the hardest working people I know. So 7 days a week is normal for you throughout all this. So why don't you tell us, so how would someone get a hold of you if they are wanting to refinance?
Yeah. I don't know if we're going to list my phone number somewhere.
We'll list your phone number.
My cell number is the easiest way. People text me, call me.
Sure.
Email's great too.
Sure.
I respond to all. And then I have a mortgage app that you can put on your phone that's really helpful.
Oh, yeah.
And so a ton of people get on there, and they can do some of their own work on there. There's calculations that you can make for mortgage payments, affordability tabs. And people really like to play around on those calculations, I've noticed.
Yeah.
You can upload your loan documents there too, but
sure,
you can get a hold of me that way too.
Oh yeah, wonderful.
People can fill out their loan application even with their mobile phone. So
yes. So you've touched on people who are wanting to refinance their house. What are your thoughts on people who are looking, to buy a home or be a first-time home buyer?
I'd say now is always a good time to start the process. You'll find that when, I pull your credit and we look at everything, maybe you're self-employed and we need a little bit more time for your income to seasons. We need 2 years for self-employed. I'd say a lot of people have to work on credit too. This whole time is making us all realize I'm going to dig a little deeper. Our credit score is around 640. That's where we need to have your credit score be so we can do a loan. And so let's just go ahead during this time, if we can't buy, let's go ahead and work on all those items, saving up, getting reserves. I think that it's an exciting time for people that have worked really hard and now maybe they've missed out on some deals. I think you're going to find that you might not have to fight so much with multiple offers anymore. So I'd say, hey, you should go out and shop.
Sure.
So I think it's definitely just like anything, whenever it seems like there's something catastrophic that happens, I truly think there's always hope.
Yeah.
And I just really think if it didn't work before, maybe it actually will work for somebody now. So there's never a dead end and there's never hopelessness. So that's my 2 cents.
Yeah. And if you do want to purchase a home, I know a great real estate agent that you can work with. I'm not going to name any names, but yeah, so again, we just wanted to talk about some of the things going on with the interest rates and everything. So Leah, thank you so much for coming out. And yeah, definitely. So thanks, guys.